In this video, I want to share with you some of the classic principles of how to win when trading Bitcoin and cryptocurrencies. These are the tips and tricks that pro traders use to give themselves the best chances of success. But look, for real, many people have no business trading cryptocurrencies. You will simply want to stack sats and chill. That is to buy and hold Bitcoin long term, dollar cost averaging on a weekly or bi-weekly basis. Because the harsh truth is that most traders go completely broke. Or even if they do well, they simply perform worse than they would have by just investing into Bitcoin and leaving it to chill. Well, some social media personalities will be out there selling the myth of getting rich overnight. The truth is that for many people, you will go broke overnight. Very different idea. And while some people may get lucky a few times, they will not play out very well in the long term with day trading. The truth is, day trading is notoriously difficult. If it was easy, everybody would do it. But it's not easy. It's incredibly emotionally taxing, and you're far more likely to ruin your life than to make your life so much better by trading cryptocurrencies. Let me share some crazy statistics with you here. 80% of all day traders quit within the first 2 years. After 5 years, only 7% remain. And look, you don't have to be trading every day for these principles in this video to have some use for you. Even if you're trading once a month or less than that, still useful knowledge. The majority of active traders underperform the market. Many of them catastrophically so. The best, mildly so, and a small group of elite traders outperform the market consistently, basically establishing a mechanism in the day trading market whereby the uninitiated give their money over to the veterans. Weird system, but that's kind of how the day markets work. But even with this astonishing reality that almost everyone loses, many people continue trading even after being proven unprofitable with their trading strategies time and time again. And they continue to make mistake after mistake with their real money going down the toilet. Many people are they're unprepared, and they're simply not willing to do the work that it takes to get prepared. It takes a lot of studying, a lot of work, a lot of strategy. But to reuse a little analogy I cooked up the other day around trading advice, trading, it's like sex education, right? If you're simply telling people not to do it, then you're gonna fail because of course they're going to do it. Because much like sex, people are going to go and trade cryptocurrencies. Much like sex, if done right and using protection, then it can be fun for everyone involved, right? And much like sex, when done wrong, without knowing what you're doing and without any risk management, then things can go very wrong very quickly. I mean, look, everyone has had a frozen banana or an olive oil story. Am I right? Anyway, before I break all of that down for you, if you are looking for a great place to trade cryptocurrencies after hearing all those disclaimers, of course, then get signed up to Binance using the link down below. Binance is, of course, one of the most liquid and secure cryptocurrency exchanges out there with a massive range of the top cryptocurrencies available to trade. And when using the link down below, you'll get a 20% fee rebate on all of your trades. So, trading. Much like anything else in life, to achieve success in trading, you have got to work hard. Because being a good trader is not some crazy secret, but it requires the proof of work to get good. Yes, it is true. You can make money trading. You can make great money trading. But if you're expecting to take $100 and go turn it into, 10 million bucks overnight, got some bad news for you. It doesn't work like that. The best traders, they're the ones who make slow, steady wins time and again, using patience and using a set plan and strategy. So let's dig into some of the top tips here of how you can increase your chances of consistently being on the winning side of trades versus being on the losing side of trades. The first is to not overtrade. It's a classic mistake that a lot of new traders make. Too many trades going on at one time only increases your risk portfolio. There is the chance that the trade, every trade actually, could move against you if Bitcoin craps out, or if Bitcoin takes over and pushes altcoins down. Every trade could hit a stop loss. Many of the most successful investors are incredibly patient, and they have a lot of time sitting around waiting for the opportunities to come to them. They're not out chasing every candle on the move. You do not have to trade every day to be an active trader. Sitting on the sidelines, oh, it's so powerful. I've saved myself so much stress by just sitting out the market sometimes and waiting for those perfect opportunities. Because one of your top priorities needs to be protecting your capital. If the trades aren't looking super hot, or you're feeling really indecisive about the current market, just sit it out. You do not need to be trading. You don't need to be online all the time. Just accept that you're going to miss perfect entries sometimes, and you're going to miss perfect exits sometimes as well. And that the market will always, and I do mean always, provide more opportunities for you. It always does. Make sure when going into a trade to really weigh up your risk to reward ratios as well, which means that you had damn well better know where you are going to be putting your take profit levels and where you're going to be putting your stop losses at. Super important. And make sure that once you have those levels established, you stick to the plan, man. Having a plan when trading will really help you keep focused. It helps you keep really better track of your emotions and to better identify those entry and exit points. Now, the emotional part is especially important when things start getting a bit wild in the market. That plan will keep you focused. The next big tip is to trade with reasonable size limits. Most of my trades personally are 1% or less of my total portfolio. A number that you'll hear the big boys throw around is maybe 2 or 3% of their portfolio. Obviously, nothing is fixed. You know, a Bitcoin USD trade might be 2% of your portfolio, but an altcoin to Ethereum trade might only be 0.5% of your portfolio. But the sad reality is that many retail traders are going in with 100% or 50% or some other ridiculous amount of their entire portfolio. The simple equation here is the bigger your trade size, the bigger your risk of loss. Sure, smaller reward too, but this is a game of mitigating risk. And when we speak of mitigating risk, then of course we have got to discuss leverage trading, because longing and shorting Bitcoin and a whole range of other cryptocurrencies is a big and very lucrative and very attractive part of the cryptocurrency market where, yes, people do make incredible gains and sickening losses. And to those who are unable to manage the risk properly, leverage trading is really little more than gambling. The maximum leverage that you should really use is 5x. Many pro traders, they use 2x or maybe 3x. But sadly, many retail traders get lured into that fantasy of overnight riches and they're doing 20x or 50x or 100x. No. Just because it is on offer does not mean that you should use it. Just because someone's offering you a glass of tequila doesn't mean you have to drink the bottle, right? If you want to know more about how to use leverage, I made a tutorial on how to use BYBIT. You can find it in the description below, or there'll be a pop-up at the end of this video. Now, the next big thing to learn is how to manage your emotions. The crypto trading world, it's 24/7. That means that it becomes way too easy to become glued to your computer screen, watching for breakouts, trying to follow every little twist, every little turn, and outplay the market. Man, what kind of life is that? You know, the markets, they never close. And I understand. It's so easy to feel that you always need to be on. You always need to be trading. You always need to be watching. It is simply not true. Manage your time. Be patient. Wait for the setups. There's always an opportunity. Do not FOMO into those, green candles. Don't go chasing green candles, guys. That is how people lose fortunes and ruin their financial and sometimes even their personal lives. Besides, keep it real, guys. Being in front of a computer screen 24/7, man, that's no way to live your life. Set a time for yourself to look at the charts, and that's your trading time every day. Say it's 6 to 6:30 every evening. Then close your computer and walk away. Didn't mean you haven't made a trade during that time. You're just watching the markets and seeing what's going on. You're not becoming a slave to the charts. And actually, constantly being online, you know what that's going to do? It's just going to burn you out. And your chances of being a successful trader when fatigued and stressed out from looking at your computer all the time, pretty damn doubtful. Make sure to get enough sleep, go to the gym, get out and, socialize with other humans. There's other humans out there in the world. You guys notice from time to time, but go out there and make friends with them, talk to them. Some of them are okay. And if you're not in a good mindset, then do not trade. You don't need to. Take care of your mental health, because day trading can easily lead to exhaustion and relationship stress and loneliness and depression and alcohol and drug abuse, and yes, for some, even suicide. Seriously. You really need to think long and hard if day trading cryptocurrencies is actually something you want to sign up for. And do not skimp on managing that risk if you decide that yes is the answer. Also, make sure to avoid that good old classic gambler's fallacy that you're going to keep winning because you won once or you won twice or you won 3 times in a row. Doesn't mean you're going to win a 4th. And please, do not revenge trade. I know it's so tempting to try and make up a big loss by jumping straight into another trade. You have got to remove your emotions from the equation when trading. Sometimes it is best just to get up and go take a walk. Get away from your computer. You don't need to be there. You don't. Enter trades only if they meet your criteria as defined by your trading strategy and plan. When you start breaking your own rules, things tend to go from bad to worse very quickly. Besides, if you were proactively managing your risk, then you'll be way less tempted to revenge trade anyway, because you're managing your risk and you're sticking to the plan. Important stuff. Understand too that even though you may have an awesome plan, you may be totally zen, totally prepared, right? Practicing the best risk management strategies. The market, oh no, the market, not your friend, not at all. It does not care about you. Certainly doesn't care about your ego or your money. It will trigger stop loss after stop loss after stop loss until you are totally wrecked. The market has no shame in punishing you for having the best possible practices, and it certainly has no shame in rewarding some degenerate YOLO gambler who has no idea what the hell they're doing, who turns $1,000 into $1 million with some random 100x margin trade. That crap does happen. Welcome to the crypto markets, guys. Crypto. Fun game, isn't it? Trading, anyway. So, understand the insanely speculative nature of cryptocurrencies, and thus, of course, as a result, the insanely volatile nature of the market. There is a massive lack of fundamental reasons why many of these cryptocurrencies pump. These pumps we brought on by basically nothing sometimes. And then on other situations, you have massive news about game-changing partnerships and almost nothing happens to a given cryptocurrency. Remember that for most cryptocurrencies, there's no business model, there's no transparency, there's no quarterly earnings reports, there's no dividends for a lot of them, right? Pumps sometimes happen just because, I don't know, get some cartoon llama or cartoon dinosaur over on Twitter or Reddit spreading a rumor, or because an organized pump and dump group grabbed hold of a cryptocurrency and is actively running a scheme on it. Next is to learn how to automate your trading. make sure to set a stop loss in your order, and also set a damn take profit on your order. The problem with that is that exchanges tend not to offer all of that functionality that you need natively. So you'll need to use a third-party service like 3 Commas. It's a great place that allows you to highly customize your trades by setting up stop losses and using trailing stop losses, and setting your take profit levels and splitting your take profit levels and splitting your orders up, and a whole lot more than that. Highly customizable. There's a link down below if you want to check 3 Commas out. Also, if you're new to trading or newer to trading, still finding your feet, 3 Commas has a great testnet account that lets you play with 10 grand worth of funny money to really test out the platform. But more importantly, it lets you test your trading strategies. Now, this is a great way to test your plan, to play with the indicators, to learn your feet a little bit of what you're doing without risking your capital. Because remember, there's always opportunities. You have time to learn. Also understand which indicators work best for you and which ones don't really work for you. You do not need to consult every single indicator out there. You just need to know what works for you. And I know it's really tempting to put, full-time crypto trader on your LinkedIn profile. You've got to keep it real. Trading cryptocurrency, it's not a good day job to have. Because if you are trading for your income, if you need to win to make money, to pay your bills, to feed your kids, oh boy, you're in big trouble. You need to have enough spare capital to have it not matter, to ensure that any losses that you take, they don't affect your lifestyle. It's got to be extra money. Any money you put into trading, just assume that it's gone, right? It should not be life money. Needing to make trades because you need to pay the bills, man, that's just putting your back up against the wall, and that increases the emotional stress and lowers your clarity and makes you less likely to succeed. Anyway, these are just some practical tips for you. If you are an aspiring trader, I hope that it will help you become a better trader. It's just some classic stuff, guys. But also, if you're a veteran trader, I hope you also got something useful out of this. I know I make similar kind of videos from time to time, but it's just such important information. It's got to keep letting everyone know about these important maxims of crypto trading, because I know you guys get into it. So, trade safe, everyone. And if all this has left your head spinning, don't trade. Just don't do it. You don't need to. Just stack sats and chill. Trading crypto's hard. Buying Bitcoin once a week and holding on to it, it's way easier. Those dollar cost averagers out there, those long-term hodlers, those guys sleep well at night. And they tend to outperform the majority of traders while at the same time protecting their capital, enjoying their lives, and generally chilling. Stack sats and chill, guys. Anyway, thank you guys for watching. Let me know what you think about this video. If I missed any big trading tips, or if you have any big trading tips you'd like to share with everyone out there, down below in the comment section. Make sure to hit the thumbs up if you did like this video, and subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time. Yeah!